Hi to all traders. Sorry about that technical mishap there. So we should be back live now on YouTube and our Facebook pages. And as I said, this um, this webinar is brought to you by Orbex. So we've gone through, just go through the risk disclaimer one more time for those of you that didn't see it. As I said, only risk capital should be applied. And this is my personal technical and fundamental analysis as well. So thanks for waiting for me. As I said, any questions that you may have on the NFP, on the job figures or anything inflation, we're going to be looking at gold, the dollar, everything that's going to be moving quite dramatically in the next few trading minutes. And also I've got a special guest speaker, Daniel, that will be joining me shortly as well. So thank you for sticking around. As I said, I've got a few technical mishaps, but now everything should be fine. So once again, thank you very much for joining me. So just looking at the numbers then, as I said, last time around, we looked at 185,000 jobs being added only as we look to a little bit of a subdued NFP. We're seeing that even though America is getting back on track, especially with inflation coming down, inflation has dropped for 6 months in a row now, which is quite significant. And we're also looking that it's going to keep on dropping while the Fed keeps upping its interest rate as well. So that's going to probably keep on going as well. We're also seeing in the near term, in the meantime as well, what we're looking at in the next few trading sessions. Is America going to head into a recession? Well, there's supposedly going to be a global recession coming up for the first quarter. We're in the first quarter now of 2023. So we're going to see if that's going to keep on pushing higher as well. But other figures we need to look at as well, as you can see here, the NFP figures since the middle of last year, they've slowly declined. And what's more significant is the January reading for the NFP numbers is supposedly going to jump because of the holiday season in America, but it doesn't seem like that's actually happened. So has it been a bit of a miss for the job numbers in America as well. So as I said, inflation coming down, retail sales data as well on the way down. But if we just look on the next slide, and we're going to see, I've just had a question now from Glyn. We'll be looking at dollar yen. Yes, we will. We're going to be looking at all the major pairs and gold and oil coming up shortly. Just going to take you through just a couple more slides so it doesn't get too boring, just to get you in the mood for where we're going and where we're supposedly heading for the next couple of months. So US weekly jobless claims fell to the lowest since April. They're under 200,000 now. This is very important because this is a weekly movement in the market as well. So just reply back to Glyn. And annual inflation slowed to 6.5%. Don't forget, in the middle of last year, it was at a 40-year high at 9.1%. And as you can see from the chart here, 9.1%. And since then, inflation has steadily come down. And that means that the Fed won't probably be hiking interest rates aggressively anymore. Remember, 75 basis points at a time last year. The last reading on Wednesday was only 25 basis points. So it seems that as inflation is coming down, we're seeing the interest rate hikes just moving slowly, not in big aggressive stages, but slowly. So there's a terminal rate as well. And what the terminal rate means is that the Fed are looking to stop raising interest rates because they feel it's enough for when the inflation rate is coming down as well. So still a long way to go from the 2% that it thinks it's going in and out. Just been told that the audio is going in and out. It's intermittent. Okay, I'll try to fix that for you. So I'll just make sure that everything's working okay on my side. Turn it up to 100%. So if you have any more problems, please let me know with audio or visual. So retail sales as well. This is the last slide. I promise you. We'll go straight onto the chart shortly. I just want to show you that retail sales data has actually slumped into a negative territory once again. And this is quite a big concern for America because obviously with the Thanksgiving period and the holiday season in America, you expect retail sales data to really start jumping vastly. But this minus 1.1% was December's data. So if you think that's not a very good sign for America, seeing as though that it was a big spending opportunity for a lot of Americans as well. So it could be a fact that America isn't really jumping as much as it should be with a recovering economy. So we'll see what happens then. And also, we're seeing that the ADP numbers were well below, really missed 106 jobs added in the private sector last time around versus a forecast of the last time, which was 253,000. So really looking really badly there. So that's what it's looking like as well. So as I said, any questions, please keep them coming. Okay, so thank you for the small presentation that you've given me. So just as I said, we're going to look on the main basket of currencies. So I've just picked out, the euro, pound, yen, gold, and dollar index, and also the Dow, because the Dow is actually making quite a strong recovery as well. And so let's look on. Great, I'm glad you can hear me, Lynn. Thank you for letting me know about the audio. So let's look on gold first of all quickly, because gold is quite a popular subject that a lot of our clients are looking at, and we were heading. I'll just put this on a daily chart because what I want to show you here is we were heading for this major rebound, but we're getting a little bit of heavy resistance at the 1950 area, and this was particularly, as you can see here, we had this kind of double top here. It was particularly predictable because the 1950 area had been pushed once again. I'll just zoom it in so it's a bit easier to see. So at this particular area, we got a little bit of resistance a few days ago. We went for another run to the upside. So 1950, it was a good psychological point that a lot of traders were going to start selling. And as you can see here, the market moved down as predicted. But we are expecting this to be a slight correction and then possibly another move higher. So once we break that 1950 barrier, gold is expected to start moving to the next dizzying heights of roughly about 1985, possibly 1990, and then another push for 2000. So expecting another push for 2000 by the end of this quarter, which means in the next 2 months, there could be another move to 2000. This is the line that we're taking at the moment, and possibly what's in store for gold as well. So just to add to the question from Glyn about dollar yen, you've got a short trade on the pair at the moment. Let's take a look at how that's performing. So at the moment, we've had a bit of a strong dollar in the last few trading sessions. However, this particular wave here, I've got it on the 30-minute. Let's go on the daily charts a little bit easier. As you can see here, now that we broke this particular level, roughly about the 131 to 130 area, we are expecting now prices to keep on moving lower. With every bearish or bullish move in the market, we have these small corrections, as you can see here. So we've got a bearish run here, and then a correction, another bearish run, and as you can see, another correction. And as it goes in this zigzag formation, now we're looking at the next bearish run. So a short position is more favorable on the dollar yen. It's looking like it's going to possibly start moving a little bit lower. We're just waiting for this correction to either move in a consolidation pattern, or we can start seeing possibly prices giving us the next direction. So if we just squeeze this into a bit of a triangle here to see where the next move is. As you can see here, we're just waiting now for prices to possibly break this lower leg of the triangle. And if it does, then prices will probably start moving a little bit lower down to the mid 120, which is like 124, 125, something like that. So this is what we're looking for dollar yen. And we're also seeing possibly what it means next for the dollar in particular, because if we just take you through a few of these pairs before the NFP numbers come up. So we've got 15 minutes left to go. As you can see here, euro dollar has been very, it's been rebounding quite significantly, because obviously we've had in the last few trading sessions 130 pip move to the upside, and then a collapse back down 130 pips. And now we're starting to see a slight recovery on the euro dollar. And this is actually on the pound dollar as well. We've moved 50 pips so far to the upside today, getting back over that 109 handle. But as you can see here, we were above 110, which is quite significant. We haven't been that far ahead, as you can see, since roughly April last year. So if you think about it, we're in February now, so it's nearly a year high since we that we're on at the moment, and this is pretty much due to the Federal Reserve really aggressively raising interest rates. And as soon as they went back on their monetary policy, meaning as soon as they started to relax on it and started not aggressively raising rates anymore, inflation went down. As you can see, there was a big swing around in the dollar, and it actually started to move higher. Same with cable as well. Just touch on cable quickly. As you can see here, we were in a bit of a flag shape that was tracking for a few weeks. And once we finished the flag, as you can see here, we got to the bottom and then we started moving. A flag pattern is basically a reversal pattern when it reaches a certain point. And as you can see here, this was the flagpole. This was the actual flag, the piece of fabric that you see on the flag. And then when you hit a particular support zone or resistance, depending on if it's a bullish or bearish flag, then prices started to move higher. What we're seeing now, though, most interestingly on cable, is the fact that we're having heavy resistance on this particular area here, which we've seen quite a few times. As you can see, very heavy resistance, roughly about the mid 124 handle, and now we're going to actually start moving a little bit lower. But how far low, we'll have to wait and see. It's actually very interesting what we're looking at the moment, because when we're looking at predictable markets, it means an advantageous market. It means it's very opportunistic. We can put in a lot of buy and sells and possibly make some good profits from it. So at the moment, as you can see, very heavy resistance here, and it was predicted that once we had a test at this area, prices will start falling lower. And look what happened. Okay, we did have the big news of the Bank of England yesterday. However, it was more than likely going to start moving lower. So we'll just see this choppy action on cable, if it will keep moving higher and lower, and in this choppy zigzag pattern as well. So we are expecting prices to start moving lower even further, possibly another 100 pips or so before we see another signal to the upside. So very important on cable. Let's just take a look on the dollar index as well, because this gives us just a brief look at the American economy and how it's moving. Particularly what we're looking at the moment is the $100 area, because this is quite significant, because as you can see, it's been pretty much a collapse on this dollar for most of 2023 and actually at the back end of 2022 as well. So very significant as well. And just a quick look on the Dow. The Dow has been a very good performer, because since we realized this V-shaped recovery here, again at the back end of last year, when the Fed's monetary policy was loosening, we've had a very choppy market, very zigzag creation there. But as you can see here, we're now in a kind of inverted triangle motion. We are expecting prices to test these particular areas once again, and then we'll see if we can come out of it to the upside. But it's all about breaking these recent zones, roughly about 35,000 as well. We were hovering around 34,000 for such a long time for the last few weeks that we're just looking to see what the next move is for the Dow, and also Nasdaq and S&P as well. Very good performers in the last few months. As I said, big moves to the upside after this V-shaped recovery. So it's very good. So let me know what you're trading on as well. It's always good to get some interaction and what we're looking at. Just run back to the euro dollar, as I just wanted to show you as well what we're expecting for the euro dollar. Just put on the 30-minute chart, so it's a little bit more easy to comprehend. So as you can see here, we've moved 50 pips to the upside already today. It's looking likely that we will see a little bit of a weaker NFP number. So what this would mean is that a lot of other currencies apart from the dollar will be quite strong. So this would mean that the euro dollar will probably start moving higher. Will it recoup? Will it regain the 130 pips that we saw collapse yesterday's session? Well, as I said, we've already gone roughly about 40 to 50 pips to the upside. So we've got another 70 to 80 pips to go. It isn't really something that the NFP has done in the last few sessions, moved so much. The euro dollar has possibly moved about 40 to 50 pips at the most before it started to retrace. So we are now looking to see if it's going to start moving a little bit to the upside as well. So that's quite interesting, and we're going to see what's in store for all the other assets as well. So just another question about gold. Let's just go back to gold, because gold is always a big popular mover in our client circle. And as you can see, what I'll be looking for on gold, I'll just zoom in, it's a little bit easy to see, is we've basically, in yesterday's session, we've lost roughly about $40 on gold. It's not so detrimental that gold is going to keep on collapsing. What we're going to be looking at, as I said, is a slight correction to the downside, roughly about another $10. Could hit the 1900 handle perhaps, which is roughly about here. But with the 1900 handle, it's a big psychological event for a lot of traders. So once that handle does get hit, then we can start moving higher and potentially start bouncing. So we're going to see what the next move is to the upside as well. So like I said earlier, 1950 is a very, very big psychological level for the for gold traders in general, and we're seeing what is just happening in the near term as well. So not too long to go before the NFP, just under 9 minutes, and we'll see if there's going to be any sort of big movements. Just go back to here. Big job numbers that are going to be moved about. So as I said, the previous was 223,000. We've got a consensus of roughly about 185,000, and the unemployment rate is expected to jump a 0.1%. So, a 0.1% doesn't sound like much, but when you've got the whole population of America, then it is actually quite a big number in that regard as well. As I said, from the middle of the month, middle of the last year, we had such a big jobs number being added, over 500,000 new jobs added. However, since then, it's been quite subdued. But before COVID, a new jobs being added, 200,000 to 300,000, wasn't actually that bad. It was actually quite good. But obviously, we've been used to having more and more of a job number jump to the upside as well. So 200 to 300,000 is quite standard now. So this is what we're looking at as well. So it's looking likely that we will just have a little bit of a subdued number, a little bit of a downward number, but still a good number because it's still positive and it's still looking like that it's going to keep on pushing as well. So the one forex pair that I didn't look at just quickly is the dollar CAD, or the loonie. Now, the last time we looked at the dollar CAD, we were seeing this particular open-ended triangle, but as you can see here, it pretty much, I'll just zoom in so it's a bit easy to see. We brought this particular resistance with this big bearish candle, and now we are on the downside, looking likely of a bearish channel. So I'll just put that in place as well, so it's a bit easier to see. And as you can see now, it looks likely that the dollar CAD will continue this downward spiral as well, looking likely that we're going to keep on pushing lower. And I've just been joined by Daniel now, so I will add him. And hi, Daniel, can you hear me?
Yeah, you sound a little clipped. Hopefully that's not going out too much. But yeah. Sorry about
Okay,
a little bit late. I think
no problem. I've got a bit of a I've got a bit of a muted background today, so I've got it's a bit dark in the background. So don't be too scared. It's still me.
Funny, I was worried about that. Mine is kind of dark too. It's cloudy here. So
yeah, it's probably best actually.
I should next time I'm gonna get some big bright lights and shine up.
Exactly, yeah. Maybe next time. Well, thanks for joining me again, Daniel. Just been taking our viewers through, as usual, through a few of the charts and seeing where we're going to go. Just want to quickly ask you about inflation in America, because we had the big news of the Federal Reserve interest rate decision a couple of days ago, and they're kind of a little bit more subdued in their aggressive rate hikes that we saw for the majority of last year. So do you think that we're kind of getting close to a terminal rate with the Fed, and are they looking likely that they'll slow down, like this is kind of going to be the new norm for the Fed, with slowing down on aggressive rate hikes?
Well, it seems to be what Paul was kind of seriously hinting at there. He said a couple more rate hikes.
Yeah.
So that gives us 25 last time, 25 now, and then that reaches pretty much actually where the Fed was kind of signaling it was going to go. 5.25, something like
Hmm.
that. The market below 5, and so I guess now they're going to have to. But it's also kind of like it gave a pretty a pretty dovish idea from it, because everyone's sort of expecting Powell to keep saying, yeah, we're going to keep raising rates and keep going, and he didn't really, his tone changed a little bit there. So it seems like
Yeah,
the Fed at least is getting kind of more comfortable with the inflation's been coming down quite a bit, and well, the core has been kind of slower, but at least it's not like in Europe where core is actually going up. So
exactly.
yeah.
Yes. Yeah, like yesterday, we had the Bank of England obviously putting in a bit of a grim forecast for the
Yeah.
next few months as well. So it's a little bit of a contrast from America and the UK and Europe, would you say, in going forward into this year?
Yeah, it's kind of like the United States has one problem, and Europe or continental Europe has a different problem, and Britain has both of those problems. So
They're in the
it's a
middle,
lot
aren't
more
they?
complicated. Yeah. I really don't envy Bailey and how he's going to have to deal with with what's coming up, and or Sunak for that matter. They're in kind of a difficult spot.
They
But
are, yeah.
hopefully inflation will start coming down for the UK soon. But I guess that's why the pound is getting weaker, while the dollar got weaker.
Hmm.
Even though even though the index went up, because the pound and most importantly the euro got stronger. So it's sort of like, well, if the Fed is less hawkish, or is more dovish, if we can say it that way, then why didn't the dollar go down? It was because the euro, the interpretation from the ECB wasn't so uh, so hawkish. So
Yeah,
you always have to consider the counterpart of whatever, because everything's binary with the trades. There's always something else going on the other side of the trade, so you can't just stick with with what one central bank is going to do. You also have to consider what the central bank of the other currency in your currency pair is
exactly.
doing. Yeah.
Yeah, exactly. I was just taking our views on a bit of a journey through the inflation rate, because 6 months ago we had this 40-year high at 9.1%.
Hmm.
Excuse me, but for the last 6 months it's been steadily dropping, and it looks like a sign of the times now, where we're expecting the inflation to keep on dropping. Would you say if it does kind of bounce up and you know go to 7% again or something, could it could we start worrying and run to the hills in panic because inflation might start creeping up again?
Yeah, it seems like that is a pretty good summary, because everyone seems to be like, oh, okay, the Fed has raised rates, and there
Exactly.
could or could not be a recession, so that's all pushing the inflation going to go down, and then suddenly if the inflation starts creeping up, and there's a lot of reasons for inflation to suddenly start creeping up too. So it is quite possible then suddenly everyone's going to have to reevaluate where their expectations are, which could push the markets in a completely different direction, and it could also lead to the Fed raising even further. Like, initially, when the Fed started raising rates, everyone was sort of like expecting the Fed is going to have to get the interest rate above the inflation rate, which has sort of been like the traditional way of how do you have to really tamp down inflation. And so the
Yeah.
Fed hasn't done that. The inflation is still, I think it's still close to double the. No, it's not that far. Near that, of what the interest rate is, and so
Mm.
maybe they can pull it off, or maybe it just means that the inflation is going to be high, just not drastically high, for an extended period of time. And I think even the Fed is sort of admitting that inflation is going to be above target until well into next year. So it's already been 1 year of high inflation. That means this year of high inflation, and then next year of inflation
This is the
above
thing,
target.
yeah, exactly. And
Yeah.
it doesn't take, it probably won't take a lot of for the Fed to get trigger happy and possibly start raising rates once again. I mean, it doesn't really seem out of the realm that they're going to
Yeah.
start doing that.
Yeah, they're definitely in a much more interventionist mode. And then, of course, next year is an election year, which also
Exactly.
changes the dynamics there a little bit.
Quite a bit, yeah. So thanks for that, Daniel. I was just waiting for the NFP numbers to come in now. Just a few seconds away from the
Yeah,
data. So we've also got unemployment rate as well, expected just to tick up slightly, but oh no, it's actually ticked down slightly, 3.4%. And wow,
3 point.
non-farm payrolls, 517,000 new jobs added. So
Wow.
very, very strong dollar. Wow. So we're looking at
Yeah,
a
that's
consensus,
really unexpected.
yeah, it's a consensus of 185,000, but coming in at over. Uh, what are your first thoughts on that, Daniel?
I would look at the birth death adjustment, because remember we had this back, what was it, in July,
That
where
has an important
they're expecting
part to play,
200,000.
doesn't it? Yeah.
Yeah, and so it jumped above 500. See exactly why you had such a big move. Because also ADP didn't come in particularly well, and we've also been. But
Yes.
then there's another thing: is last month the number of open jobs increased substantially, which was a little bit of a surprise. But then of course it was December, so then that might be part of the explanation where it is. And we see average hourly earn. No, that's not the wrong one.
Yeah, we've got average hourly earnings just dropping slightly monthly and year on year, but manufacturing payrolls 19,000 compared to 6,000 predicted. So I would say
Yeah.
quite a decent a bit of data for America compared to what we've been used
Yeah.
to.
Also, last month is revised higher. So
Yes,
it's not only a 300,000 beat, but there's an extra
17
40,000 added to the prior month.
40,000. Yeah, so that's quite a big move as
Yeah.
well. Okay, then. So let's just take a look at the charts while we're just digesting this
Yeah.
information. So
The birth death adjustment hasn't arrived yet. So as soon as I see it, I'll let you know. But yeah, I would expect the dollar to get quite a bit stronger, because now
quite a
now the Fed has
bit
more
stronger. Yeah,
reason to keep going against the inflation.
exactly. So 80 pip move for the euro dollar as well. Just to take a look on the Dow, because I had a few questions with the Dow. So that's actually dropped quite a bit as well. It's retraced half of its weight value so far at the moment. So it looks like it could possibly. I'll just put it on the tile windows, because what we usually see now when there's a big move in the market, 70, 80, 90, 100 pips, we usually get this big retracement, and it's actually starting to take place right now. If we look on the euro
Yeah.
dollar, we've already retraced 25 pips. So it could be a good, if scalpers in the market, it could be a good time to, put your trades in and possibly get out in time. But yeah, it seems to be quite rebounding quite significantly at the moment. And same with gold as well. We moved just over $15, and now we've retraced $5 already. So it's looking likely that we might see a little bit of a bounce back on the currency pairs, but we'll just see how much it would be for.
Yeah,
Well.
it also depends on a little bit of the interpretation. And on the Dow chart, I think it looks like it almost completely retraced the gains that it got from when the Fed came out on
Yes,
Wednesday or something.
exactly. Yeah, it did
Yeah.
retrace quite significantly. We've got Glyn online.
So yeah, I guess it
With,
was.
yeah, sorry, tell me.
Uh, Sorry, it's like the original notion was that the Fed would maybe raise it by another 25 basis points after
Yeah,
the one that they're expecting, and so then they priced that in as instead of 50, and so now it seems like they're pricing in another 50 instead of going right back to where it was just before the Fed. That seems to be what the data is pointing to. So you could then get a reversion back to the where it was, you know,
yeah,
3 days
true.
ago, where the market was
That's it.
trending, I guess.
Yeah, that's it. When we look at market trends, like you just said, a perfect example. We just look at the potential opportunities when we see certain trends in the market. So we're just seeing what what the trends are at the moment. Obviously, with such a big high impact news, fundamental news event such as the NFP, when we see a big move like the dollar yen's moved over 100 pips, but it is actually retracing slightly now. But we don't know if it's going to be
Yeah.
a full rebound at the moment. So it's just waiting on the next round of data. But also later on, Daniel, we've got ISM non-manufacturing data as well, which is supposedly, well, I mean, based on what's happened now, we take the consensus or the predicted results too well, because we've had over 500,000 new jobs being added, but the ISM is supposedly a little bit less than last month. But do you think it's going to really affect America that much? Because we've seen, the ISM results, we've seen, would you say the Fed is probably one of the main drivers of the currencies at the moment, and not really so much the other aspects such as the ISM?
Yeah, pretty much. Like mostly the ISM, what you would say, um, conditions where it's like the Fed is doing the well, what its expectations of what the Fed is going to do that drives the market, and so the ISM really has more an impact on what the expectations of the Fed are more than on the market. So it's sort of like an indirect, but you can still get a little bit of an impact. However, that impact will be sort of filtered and somewhat muted, particularly depending on what the perceptions of what the Fed is going on, and it could also suddenly get reversed if we get more Fed comments. I don't think any of the Fed members are scheduled to talk today.
Mhm.
So that gives us a whole weekend to respond to the ISM. But then probably on Monday, there'll be more sort of clarifications that come out after it, which is sort of like typical that Powell comes out and says something, and then
Yeah.
you get other members come out and they sort of like couch it a little bit. So and then it brings it back into sort of like a more, I guess, more average thing.
Mhm.
So I guess it depends. Then, like as you mentioned, we can't particularly trust the consensus lately. So
Especially now from the last
yeah.
5 minutes. Yeah.
So I mean, if ISM the labor data is kind of pointing to ISM is going to beat substantially, and so that could be just another point to add to it. But
Yeah.
then if we look back, like all the industrial information data that's been coming out for the last week or so, it's been kind of negative. So it depends on which side of that the ISM is going to fall onto, and
Mhm.
so it is quite possible to have a large jobs growth number, but also industrial production to be not doing so well. And so then that's why it'd probably be really good to get a full breakdown of the components. But
Mhm.
the problem with is that the BLS doesn't provide that until like 2 weeks, 3 weeks later. So
Yeah. There's a bit of
to get
time.
a full understanding of it is going to be a little bit of a delay. Yeah, as you mentioned. And also, the birth death adjustment is a negative 144,000. So that would be not, so the overshoot isn't attributed to the birth death adjustment this time around too. So that would be
Mhm.
an organic creation of almost 300,000 extra jobs, which is kind of
Well,
surprising, especially
yes, it is.
in January and not in December. You were mentioning it before. I think it was when we did the podcast back in November that in December it's normal for the businesses to hire more people, but that didn't
Exactly.
seem to happen. Now it seems to happen in January. So I
Exactly.
don't know.
It's very strange. Yeah, because I was just telling the viewers before you came online. Yeah, like, retail sales was vastly down as well for the month of
Yeah.
December, and also the new jobs added was down in December. You would expect those figures to be pretty much the highest of the year, wouldn't you? With the holidays in America.
Yeah, exactly. It's kind of surprising because all the data was sort of pointing in the other direction, and then bump. And also because services are kind of underperforming. So it'd be kind of really interesting to see where those jobs, well, like what sector they came from, because
Yes.
we only get like a breakdown of the government, and we also get it just says private payrolls, but
Hmm.
it covers pretty much everything. So one of the things that could sometimes cause a distortion, of course, is if the government goes out and hires a bunch of people for particular reasons, but some, like when the census happens, but there isn't any census going on, and
Yeah, true.
the government hasn't hired a bunch of people. So it'd be really good to take a little bit of a deeper dive into the components sometime when they become available, and then we
Hmm.
can see exactly whether this is going to be repeating. But I think the politicians are going to be really happy out of this, though. There's one thing.
Exactly, yeah, because if we go back quickly to the presentation about the new jobs being added, I mean, if we look on the chart we haven't seen this number since July of 2022, which was what 7, 8 months ago now. So, but
Yeah.
like we said on the previous NFP, Daniel, like before COVID, 200 to 300,000 jobs every month being added was pretty normal, wasn't it? It wasn't really out of the realm,
Yeah.
and it wasn't really a bad jobs number. But now, because we're all expecting and hoping that all the big jobs rebound in America is happening after COVID, uh, this 500,000 new jobs being added this time around is something to look forward to for America, and possibly avoid a recession. Or are we still looking like that way? Maybe.
Yeah, that's the thing, is that it's really kind of unusual that the Fed is raising rates and people are hiring more, and so there's sort of like the thing that you would expect. Everything is kind of like pointing to there being a recession, but then there's all these other outlying data points that show to there not being a recession. So
Yeah.
I think again, it's a matter of trying to figure out what you don't have. It's not exactly a completely clear picture. It's not like all the data across the board is pointing to it. And this is of course one of the things that happens, that when everyone expects something to happen in the markets, usually that's not the thing that happens. So if everyone's saying the
Exactly.
market's going to go up, usually that means it's going to go down. So since everyone's been saying that there's most likely going to be a recession, this could be an indication that there might not be a recession, or it might not be as bad. And then that would end up again vindicating the Fed, because the Fed has been saying there isn't going to be a recession. And so
Mm.
far, most people haven't been believing them. That's why there's been this talk about expecting the interest rate not to go up as high, or for the Fed to start cutting interest rates sometime this year, is on the basis of there being a recession. So if there isn't, then the Fed isn't going to be cutting rates. They're going to keep rates high till the end of the year. And that's, of course, going to get the dollar to be stronger than most people are expecting it to be at the moment. So I think, but again, it's also a winter phenomenon. I think, as I mentioned previously, is once we get through March, is like there's a bunch of things coming together in March, and then more or less we'll be able to know for sure whether, well, not for sure, because you can never really predict the future,
Sure.
but there might be more a clearer picture about whether the United States is going to enter a recession this year or not by the time the winter is over, I would
Yeah.
think.
Well, another thing just to touch upon, the last time around when we spoke about recessions, like the 2008 recession came out of nowhere.
Mhm.
But if there was a recession this time around, it's kind of been not priced in as much as per se, but it's expected. It's not going to be like, oh my God, there's a recession.
Yeah.
Run to the hills and this kind of thing. It's kind of been spoken about so much over the last year that if it does happen, maybe it would have a negative impact as the one in 2008 did, for example.
Yeah, it would definitely perform differently, because normally, when, like as you said, when there isn't a warning of the recession, everyone is sort of in buying mode, and then
Yeah.
you get the big drop, and then they get margin called, and they don't there's not a lot of money waiting in the wings to start buying up and pushing things higher. But now everyone is expecting there to be a recession. Everyone's expecting the market to go down, and they're putting their money in safe havens. We can look at the repo. The amount of
Mhm.
repos that the Fed has is an extraordinarily high amount. That's basically, I think it's close to $2 trillion. It's just sitting there waiting for the bottom of the market to jump in and start buying. So at
Mhm.
every point that people expect the market is closer to a bottom or is going down, you get the push of people coming in and buying, because they don't want to miss the bottom.
Mm.
And so that could then cause that, instead of having the normal thing where the market goes up, you get the recession, crashes down, and then it starts recovering. It might just start trending down, because every time it goes down a little bit, you get this jump in, trying to get the bottom and then jump in. And so it might either trend really like slowly downwards until it hits the bottom, in the case of if there actually is a recession, or it just might not ever go down far enough to be considered, or people to see it as a recession, and then end up going through a recovery, which might not actually be all that healthy, because you kind of do need the recessions to happen to sort of get rid of the zombie companies and other problems, so that
Sure.
the economy is healthier.
Yeah.
So yeah, 6 of one, half a dozen of the other about the problems and the advantages that both have. So yeah.
Exactly. No, it's a clear aspect of what you said. Yeah, it is a bit of an unpredictable world we're in at the moment, post
Mm.
COVID, and a lot of economies are trying to get back on track. And obviously, there is this, cost of living crisis, inflationary worries, and we're just waiting for a sign that it's going to kind of calm down. Obviously, inflation has been slowly creeping lower in America, but like we said in England, Britain, sorry, it is actually creeping higher. So we're just waiting for the global recovery, but it doesn't really seem like a global recovery. It's like a piece there, and we're just waiting on the central bankers
Yeah.
now to give us a bit more clarification.
Yeah, central bankers in China, of course, because now we can see what actually happens with the reopening, and whether there's actually a rebound, or it wasn't as bad as everyone thought it was.
Yes.
Therefore, there isn't as much a room for a move higher. So, but yeah, paying really close attention to what central bankers are doing, probably especially until March, seems to
Hmm.
be like really the big market mover. Like
Mhm.
here we have the data is moving the market, but it's not directly moving the market. It's moving the market on the basis of expectations of what it means for what the Fed is going to do. That's why you get like the expectation now is that the Fed is going to be hiking more than initially expected. So it isn't that the market is moving on the basis of the economy is doing well. The market is moving on the basis of what they expect the Fed to do. So
Mm.
it's probably really good to pay attention to comments from the Fed and well, and of course all the other central banks, because again, like I mentioned, you trade a currency pair. You also have to know what the central bank on the other side of your currency pair is doing too.
Exactly, Daniel. So just a recap of what we've seen at the moment. We've seen over 500,000 new jobs added, and it has been very, very bullish for the dollar. We've had on all currency pairs, nearly an 80 pip move. This is on cable. This is on euro dollar, pound. The loonie dollar CAD, and the dollar yen as well. Gold moving lower as well, but we'll see what happens for the next until the close of the market tonight, if we're going to get any more surprises. Obviously ISM data as well coming up. So thank you, Daniel, for joining me. Thank you for your insight. And
Thanks for the invitation.
no problems. At least it wasn't a boring NFP. The last few times around,
Yeah,
it's been a bit of a
definitely.
It's been a bit of a muted NFP where it's just been pretty much maybe above consensus, maybe below consensus. 20, 30 pip move in the market, something like that. But we haven't had this kind of big move for quite a while. So good that
Yeah,
you could be here.
these are the good ones to listen in on.
Exactly. So thanks, Daniel, and I'll take it from here, and we'll speak again next time around. Thanks for joining me.
Awesome. Take good care of yourself.
Thanks. Have a great weekend. Bye for now.
Bye. Likewise. Bye.
Bye. Okay, so Daniel just left us. So I'll continue the NFP for now, just looking at the charts. If there's any questions that you want me to look at any charts, let me know. Thank you for joining me. I'll just put it out there to all our viewers at the moment. So let's just take a quick look at what we're seeing. So euro dollar 80 pip move and still moving lower, very, very significant, because now it's breaking all kinds of supports. Gone through the mid 108. We're closing closer to the 108 handle itself, which is roughly where we saw the last bottom. So only 30 pips away until we see that move. We bring this out on a 4-hour chart, so we can just see a little bit more of a better picture, which is what I'll be doing for all the charts. And obviously, let me know if there's any chart you're particularly interested in. But at the moment, as you can see, what we're looking at now then is the next bottom. As I said, the 108 psychological handle. When we're looking at currencies moving, we look at particular 100 pip moves or 50 pip moves, so 107, 107.50, 108, 108.50, etc. At the moment now, because we've collapsed so much on the euro dollar, we are seeing a very big correction, and it looks like that it could be something that we saw before, which was here, and we saw quite a big move to the downside here before we propelled higher. So it's looking likely that this is going to happen again, another move to the downside before we see a big correction and start moving higher, and then hopefully break above these particular levels here. So this move, which was at the beginning of the year, was a 200 pip move. Don't be surprised if we see another 200 pip move from the top to the bottom here. We're pretty much at 200 pips now, so this will be a good test to see if history is repeating itself from a few months ago. This big move here for 200 pips, and then we saw a progressive move to the upside, roughly about 500 to 500 pips in that into the upside there. So this is something we're going to be looking at as well. Keep an eye out for, because we want to bring the best opportunities and the best predictability in the market. As I said, we've had a strong NFP number, but let's not get too ahead of ourselves. It's because it's a big fundamental news event. It might not mean that it will keep on falling lower. It might just be in the moment, at the moment, and then start pushing higher. So just be aware of that. Cable, again, pretty much like the euro dollar. We've had this choppy action like we spoke about before. Now, this particular move was kind of in priced in a little bit because we were expecting prices to retrace possibly back down here to get to form this zigzag pattern. So it has still a few hundred pips to go. Let's just see where we are at now. Roughly just over 200 pips more to the downside that could fall in the next few trading sessions. And if that does happen, then we'll probably complete these particular lows that we saw not so long ago, actually. I mean, this isn't really a weekly chart. This is only a 4-hour chart. So this was at the beginning of January, just under a month ago. So again, this is what we're looking at now for cable as well. So I'll move to the downside to test these previous lows as well. Dollar CAD, dollar Canadian. So obviously strong dollar across the board. No surprises there. But let's look on the 4-hour chart. Now on the 4-hour chart, again, we're in this kind of, well, let's look on the daily chart, might be a bit easier. Like we said before on the presentation, we are now looking at possible resistance at this top channel here. And if we do break that particular top channel, then we could start moving higher. But it's got a few pips to go yet before we get a test at that particular top channel. But we are expecting the dollar to lose a little bit of momentum as we go into the weekend, because obviously there's only so much in one direction the currencies can go. But we'll see if that actually happens or not. Gold, being asked about gold quite a few times on this presentation. So that's collapsed quite a lot here. We've broken through the 1900 handle, and we're roughly about $25 to $26 to the downside. So we're losing momentum there. And just a few days ago, as you can see here, all in all, just over $70 wiped off of gold. So it is a heavy crash. As I said, we did expect some firm resistance at 1950, and because of that, we are now looking likely that gold will keep on shedding a little bit before we get a bit of an upturn as well. Excuse me. So we'll just see trading at 1884, 1883 at the moment. So quite a big collapse. But again, we're looking at a correction at the most on gold. If it starts collapsing to 1850, then we'll have to regroup and see where we'll see the next signal for gold, especially. So we've got a little bit more to do before we get there, roughly about $30. So it isn't out of the question for the rest of the trading session, but it is looking likely that we're going to see of going on. Yes, Glenn, there's going to be a lot more charting work going on. That's very, very true. We're going to see what's in store for not only dollar pairs, but also oil, gold, Dow, Nasdaq, S&P, all these big favorable positions for the dollar. So very, very exciting times. A quick look on the US index once again. So we've got a gap in the market, which means that the price has jumped quite significantly. Testing recent resistances here at the moment. So like I said, though, we are just to kind of stress that it is a fundamental news event that we're looking at the moment. And after the ripple effects have died down, meaning that the news might not be continue into the later stages of today's session, that we could see some retracements on the dollar pairs and gold especially. So we are still expecting by the end of this quarter for the US index to test the $100 area. So we are obviously a couple of dollars away from that now because of the big jump in the market, but we are expecting that as well. And let's just look on the dollar yen. So we had a trade, a sell position on the dollar yen from Glyn, and unfortunately it's gone in the wrong direction, but he had a stop loss position in place to protect his risk capital, which is very important. If we didn't have a stop loss position in here, then obviously things could have got a little bit worse for the trade and for the account. However, it's good to know that our traders, our viewers have significant stop losses in. So if we just pull this a little bit more, this little triangle that's been forming, as you can see here, from the previous, I'll just zoom in, it's a bit easier. From the previous tops that we've seen, we are seeing another top now, but I think it's going to fail to go through this particular region here, which will be roughly about the 130 area. So if we get above the 130 area and keep on pushing, then we can start looking at other tops that we've seen, other big spikes. However, it's looking like it's starting to retrace now for a few of the currency pairs. So retracing nearly 30 pips already. Excuse me. So it is looking likely it could have reached its limit for the trading session. But obviously, if you've got trades open, then it's good to know. And Glyn said he's got a 4% profit anyway. That's great news. And it's great news because you know, the whole point of having these webinars and having these live fundamental news events is to get the best opportunities for our clients, for our viewers, to make sure that you're not missing out on anything. So this is the whole purpose of it. And where can we go from here? And finally, the Dow puts on the 4-hour chart once again. As you can see, on the grand scheme of things, it's not been that much of a big move on the Dow, especially after we've seen these huge moves in previous price action before. Let's just move some of these drawings so it's a little bit easy to see. We're still in this kind of triangle position where it's looking likely prices will start testing the ups and downs of this particular support and resistance levels. However, it's not really been too much of a big move for the Dow. So go back on the 1-hour chart. As you can see here, we've had bigger moves in the last few days on the Fed and also on the Bank of England news as well. So, you know, not too much of a big move on the Dow, but still a nice move nonetheless if you were shorting the Dow. So just a quick summary. Strong dollar, very, very unpredicted results, over 500,000 new jobs added. What will this mean for the rest of the year, and where do we go from here for the US economy? Well, we've got another Fed meeting coming up before the quarter is out. We've also got earnings season as well happening at the moment. So a lot of big companies producing their earnings, and obviously the big oil companies in the world are making quite a lot of profits due to the big inflation worries as well that's around the world. So keep an eye on these big oil corporations, because that's going to be something to keep an eye out for as well. So that's the end of the NFP webinar for this time around. Thank you very much for joining me. It's been a pleasure to host it, to show you what opportunities can be made, even if the results are very unpredictable. As I said, 185,000 jobs were supposed to be added, over 500,000 were confirmed. So in that case, the dollar has kind of bounced and it is now booming. It is really, really on the front foot for the first time in a while. So these are the things that we want to bring you as our educational webinars, and we'll see what happens next time around. So I'll stay online for a little bit longer. If there's any questions you'd like to ask, feel free, and we'll keep the charts on screen for now so that we don't miss anything. And as I said, any questions you'll be able to ask me live, or also this video will be posted on our YouTube channel as well. So you'll be able to comment and see what's the post data is as well, because obviously the markets can keep on moving quite significantly throughout the course of the day. Excuse me. So thank you very much once again for joining me, and we'll speak again next time around. Bye for now.